This is Eric Mother with Mother.com with a weekend market analysis for the weekend of December 14th and December 15th, 2019. Markets just closed here for Friday, December the 13th. And those are the closing numbers. Let's take a look at how the market has performed this past week. We can see net for the week. The NASDAQ was up close to 1%. Take a look at the S&P 500 at the end of this past week. And S&P 500 was up about 0.73%. And the Dow did end the week up slightly, up about 0.43%. Now I'll come to this, but we need to continue watching. We can see here for the month, the market is now positive as far as the Dow is concerned, up about 0.3%. And as long as the market is positive for the month, then we have to conclude that this market continues to be strong, to stable, to bullish. And if the market turns down and is negative, so let's say the market turns red at some point this month, especially if we are down, let's say a percentage, 1% or more to the downside, then that would confirm some of the bearish looks that the market has been giving us every time it pulls back on the monthly. So that's the Dow. We take a look right now. S&P 500 is up about 0.8% for the month. So a positive market on the monthly remains a good market. Now if the market was to turn negative, then that would change the landscape and we can start being defensive and be cautious. But for now, as long as we are stable, we can still play leadership stocks that are breaking out on the monthly time frame or for IPOs on whatever time frame is developed. Now I'll take care of the breakout alerts for you as I've been doing. As long as I see good ideas, I'll make sure you have those for your consideration. So as we go into the new week, one of the things that we should watch out for is now that we closed with the NASDAQ trading above 69.1 on its weekly chart, we know that as long as the market is holding above 69.1, then this continues to be a market that is very stable and should be sideways at worst, bullish at best. So again, we know this from past experience and just from understanding the market. Anything above 69.1 on the weekly is very strong. For example, we can see a period here. So let me zoom into this period in late 2017 when the weekly for the NASDAQ was up above 69.1 on its RSI. And it is this period here. Notice how the bias for the market was stability and upward momentum. This is the behavior of a market that is holding above 69.1 on the big time frames. So again, anything above 69.1 on the NASDAQ, and we'll see on the S&P 500 also is very bullish. And if the market reverses and is unable to hold above that level, then we have RSI 69.1 rejection, which can be a turn point in the market. Just like we came close here, we were rejected around 69.1, which is this top on a weekly basis. So next week, very simple, anything above 69.1 and this market continues to be hot, rejection back below 69.1 and this market would be due for a pullback. Now we can see the same setup if we take a look at the SPX. On its weekly, did close above 69.1. And the conclusion is very simple, just like we saw here. The more the market holds above 69.1, the more that's going to lead to a climatic finish to that move or to the current move. Otherwise, rejection around here back below 69.1 would be similar as I showed in the NASDAQ weekly chart, similar to this period here where we have RSI 69.1 rejection. So anything above this level here, very bullish. Movement back below 69.1 with uniform activity That would be a sign of a market due for a pullback. Now, the Dow has a little bit of a different feel in that at the end of this week, the Dow was up the list, and we continue seeing that possibility of resistance here. Now, keep in mind, we've seen the S&P 500 and the NASDAQ creep above recent weekly resistance, and the Dow might be the next to do so. But it's a very well-defined line, and this is where the Dow has been seeing pullbacks lately. So, if we're going to see the S&P 500 and the NASDAQ push higher and trade above 69.1 on their weekly, then the Dow is also going to clear this resistance area on the RSI, which is bullish. And as we begin a new week, a new options expiration week, should we pull back respecting that blue line of resistance, then this market is due for a pullback. Now keep in mind again, we see another visual evidence of the power of 69.1, as we can see. In fact, as we can see here, for 2017, pretty much most of the time, the market was above 69.1. There's a lot of joy when that is the case. You can see this powerful move. And the more it held above 69.1, the more you tend to finish with a climatic, strong uptick push to the upside. So, in the new week, simple line to watch is the RSI weekly. Anything above the blue line is bullish. Rejection on the blue line will be bearish, and of course, we are going to be watching closely for what the S&P 500 and the NASDAQ do now that they've closed above 69.1. On the daily, we saw the NASDAQ come close to RSI 50 but held above it. We can see is another way of looking at this. So really no surprise that the market is holding its own and staying stable. Is there was this line here. And really this line is a good guide. We have a breakout above the previous topside resistance line for this entry here, which turned into support. And of course here we are testing new highs. So that makes sense. After that support, the Dow held above RSI 50. It held this backtest line, just like we saw with the NASDAQ. This is uniform activity below the line, back above it, uniform activity below RSI 50, back above it. And then there's also the RSI lows line. All these things came in play and the market held. And here we are, bouncing to new highs. So, as long as the market continues showing support around RSI 50, this market should continue being stable. This past week, I discussed with you the S&P 500 on its daily RSI 50 support. You got the daily line finding support. And we have that backtest support line also, which is where the market bounced. So you take all those things, everything was leaning to the market testing new highs as long as all those three, the 50, the black line, the green line held. And now we can continue watching on a daily perspective from a daily point of view. The recent November daily closing high. In essence, the market did break out this past week, and with a slight positive close on Friday, that was a follow-through. And follow-throughs are indication of a market that has an appetite for higher prices. For the S&P 500, as long as it is breaking out successfully above 3153.63, which is this close from November, this market continues to be stable. Of course, we know that if we end up failing to hold that level and we drift below it, that's a failed breakout, a little bit of a concern. But until we break, for example, this RSI lows line here, the black line, until we break this line, and also until we are trading below 50 on the RSI, don't expect any major reversal. So it's going to be a while. It's going to need a market breaking below this trend line and also breaking and staying below 50. And also, it would also mean that we would need to break below this green line. So all those would have to happen before this market starts giving us a serious bearish look. And it would also need the monthly charts to confirm monthly resistance, as I've been stating for many months, if not for the last 1 or 2 years, that until we see the monthly charts being rejected on this level here, until we see that confirmed rejection, this market, as hard as it is to believe, continues to be stable to bullish. It would need the market to be below the red line on the monthly for us to entertain, or to seriously entertain, the possibility of a massive reversal. Right now, as long as we are seeing the market holding above the red line, we have to give the bulls the benefit of the doubt. And can the market reverse? Yes. Why? Because as I've been stating, and you can see this on a lot of charts, but some charts are changing, and I'll show you one chart that is changing. But we can see, even as we've seen the monthly price breakout take place, and the market's been responding very well, even though we have a good breakout in price, as I've been stating, as of right now, we don't have the minimum requirements of the ultimate Muade breakout being met. So RSI still not above 69.1, and of course none of the MACDs is holding above 69.1. So does not meet the minimum requirements for the ultimate Muade breakout. And so my suspicion has been that this is a market that eventually rolls over, might even be forming a generational high. Now, I've been stating that there's a possibility that it's going to take a higher breakout for this to correct itself. In other words, what I've been trying to explain is sometimes the market has to pull back at a higher level and then break out. And interestingly enough, or curiously enough, a higher breakout can actually afford the market the opportunity of staging a quality breakout. At that point, a future breakout at higher prices would push the RSI above 69.1 and would afford the MACDs an opportunity of moving to fresh 3-year highs. So it could be that we might have to pull back at a higher level and then break out again to give this market an opportunity to record MACD moving at fresh highs. Now, I was saying there's one area of the market which, by the way, surprisingly, is now breaking out at a higher level. Now, previously, my comments as far as the semiconductor index is concerned is we were seeing a price breakout on the semiconductor index, but there was no quality. So based on this monthly closing high, there's been a breakout here over the last 3 months, but there was no quality. But now things are changing, and here's why. RSI just jumped above 69.1. That changes things. And to see a good example of this, we can even use this chart itself. Notice how the market responded here. This was a very desirable period for bulls because the market defied all odds and had a substantial move higher, while the RSI was trading above 69.1 on the monthly. So if we can reclaim that 69.1 level again, we should not argue with the market too much. Now, one of the reasons why I gave you that SMH breakout this past week is because, like the semiconductor index, SMH is staging a fresh breakout after a couple of weeks of sideways action. So for a couple of weeks, it's been trading in this range here on a week-to-week closing basis, very tight base. And this past week, we saw a breakout. Now, as I was stating, this is a higher breakout. This breakout this time on the monthly looks good. So let's go back to the semiconductor index. On the monthly, RSI is above 69.1. And guess what? One of the MACDs is now at 3-year highs. So, at a higher price level, this market has reset. And now, we have the minimum requirements for the ultimate Muade breakout, which means we have to absolutely respect the possibility of higher prices. Does that mean the market cannot stall? Yes, it can, and it might. But until we see it stall, we have to take what we see, which right now is minimum requirements for the ultimate Muade being met. And so this market is now looking very good. Which means if the semiconductor index is going to stay stable and bullish, there is a good possibility that eventually the major averages, the Dow, the NASDAQ, and the S&P 500 also reset and break out at higher price levels, at which point they would meet the minimum requirements. Of course, all that remains to be seen. Now, for a couple of weeks, I've been talking about the XLF, and here we can see still not where it needs to be. Yes, we are seeing the price breakout past 2018's monthly closing high from January. So this close here is market is above that price level, but the RSI and MACD is still not showing the minimum requirement for the ultimate Muade breakout. But again, it might be that they do reset at higher prices and at higher levels after a pullback. This might change, but for now, not all areas of the market look like the semiconductor index. So maybe the semiconductor index is just by itself. And so the best thing to do for us is just to play the sectors of the market that meet the minimum requirements. Over the last month or so, we've seen a strong move in some biotech stocks. And even though that is true, the biotech space has had a nice resurgence after these lows here. But is it in the leadership? I'm not sure. And the reason why I say that is, number one, unlike the semiconductor index, unlike the price levels for the XLF as an example, here we're not seeing any breakout. So this is still within a base. We can say net we've been trading in this range from late 2018 on a monthly closing basis. This is where we've been trading in this box, big box. Is it a surprise that it is moving higher? Not really, because of this RSI 50 support. Now keep in mind, I talked about this a couple months ago. Now I'm not saying that I knew this was going to happen, but I did show you that possibility, and I'll show you what I was trying to explain is the market had come back at the time, 2-3 months ago, to test this level here. If you recall, I was highlighting this line here, and it's a simple line but really packed with information, in the sense that this is where we come off the lows of 2009. Market's been bouncing on this level, successfully pushing the biotech space back to new highs eventually. Now it's a monthly chart, it takes many months, but you can see here we had come back to test that line, we held, and now we are higher. Now I would speculate that around here it would make more sense now to actually see a reversal if the market is not in a mood for higher prices. I'll draw a line right there on the RSI, so just bear with me for a second and I'll show you where this line comes from. This line comes from this break in late 2000. What we can do is just run a quick exercise to see how relevant this line has been, and we can see that the line, the magenta line, has been good guide. We get a break here, resistance again, resistance, and then we get a breakout. Hope you can see what I'm saying is And I can't go through all of this, but at least you can get a sense that this line has been, interestingly enough, a line that has given us some guidance. And here we see uniform activity support. I'm just highlighting some of the major areas. You got rejection, trying to recapture the line here. We are rejected. The market did move above this line here for this uptick area, and then we fell and dropped below that area. So recent break here turned into resistance in early 2019 for the highs of 2019, and here we are in that general vicinity. So my thinking is, on a monthly chart, this might be where the biotech space as a group struggles a little bit. But hey, as long as the market is stable, the general market, SPX, NASDAQ, and the Dow are good, let's not fight the trend. Let's take a look here at the TSX, and last week it gave us a head fake. If you recall, last week it looked like it was breaking down here, but that was a fake move. Ultimately, we can see after all that, we did end up having uniform activity support at the RSI 50, and here we are holding stable. And we also never really broke this RSI lows line. What I'm trying to say is that just like we see with the US market, it's going to take some movement below recent RSI lows on the daily, for example, and also the RSI trading below 50. Otherwise, these markets continue to be stable to bullish. And in that type of situation, that type of market where the market is stable to bullish, it makes sense to be playing momentum breakout ideas. But wait, there is more. On the weekly, just like we saw with the Dow, this might also be an area to continue watching here for potential resistance. That is very similar to the Dow. What the bulls need to do here is clear this level as far as Canadian market is concerned for prices to advance higher, and we can see resistance on this blue line could actually generate some selling if that is confirmed as resistance. On the monthly also, we have that potential resistance based on this pullback zone. But really, we haven't seen a major sell signal because the daily continues to be constructive. And of course, on the monthly, long-term picture here is if it stalls around there or around here, you can see by drawing a line somewhere there, it gives you interesting points of reflection. Uniform activity rejection gave us those tops. Uniform activity rejection gave us the tops there. We clear that line to the upside here, we move higher, drop below it here, we go lower. So what I'm trying to say is that this line is instrumental, and we can see major break here in 2000. Major break here, which coincided with a long-term capital bear market move in late 1998, as you can see right there. So the blue line is instrumental in the market. The blue line happens to be conveniently around RSI 61.8. Take a look at the Nifty daily. We can see a recovery recently, and really not a surprise. Well, let me not say that. Let me just say it's consistent with the prior resistance line turning into support. A little bit of a different point of view. We can draw it this way, and it gives us this support point and a recovery there. That recovery area happens to be around a sloping 50-day moving average, but this is more timely in my opinion. So what we do is we take that information, which is this area here, which happens to be RSI 50. We draw our uniformity line, and without any adjustment, notice how we've been bouncing on this line, the blue line, which effectively is RSI 50. We also do the same thing here. Now the dailies look good, and again, it's not going to be until we see a major short-term break below recent RSI lows. For example, we would need to break this line here on the Nifty. That's going to take some doing. A break below this line is what would be something to consider, possibility of markets really seeing a move to the downside. Now, having said all that, just like we saw with the Canadian market and the Dow, this area here could end up being resistance on the weekly. We take a look at the monthly, and as we've been saying, the monthly continues to struggle around this area here. Of course, on the monthly, what the bulls need to do is clear that line to move the ball higher. Again, we are seeing a breakout in another market that does not meet the minimum requirements for the ultimate Muade breakout. But yet again, let me stress that it could be that these markets are eventually going to move higher, pull back and break out, and a future higher breakout might meet the minimum requirements. Right now, in my opinion, it will still make sense if this becomes an area of a reversal, and we can see a good sign of this if I draw this line right there. A major break in late 2007, early 2008. Draw that line like that. And you can pause the video and see that this is an area where the market's been responding to. Either we get movement above that line, we go higher, or we stall around that line and we move low. So whatever happens around here, that's why I keep saying that as long as we are positive for the month, let's give that market the benefit of the doubt. Really, let the bulls be in charge. If the market turns down and we see a big move lower, let's say 2%, 1% lower, and the charts are showing resistance, then that is a monthly chart to be very concerned if you're a long-term bull. But for now, as long as we are positive, the market is okay. Emerging market ETF, EEM, still within potential for resistance on this monthly level here, an area where it has struggled in 2019. And so bulls want to be able to move above this red line on the RSI if the emerging markets are to move higher. In fact, if you take a look at the long-term picture, there is a level right there. Let me draw it like that. We see some interesting areas of market behavior. A break here, a major break in 2000. A major break here, major break in 2008. Resistance here of that high. Eventually we clear that level and we move higher. And so what happens around this red line is going to give us month-to-month direction. Right now we are trading on the line, trying to move higher. So let's give it, a chance to move higher. Until we're negative, this is a market that we need to respect. Could be setting the stage for movement higher. Why? Because it is positive for the month. The Brazilian market up about 7%, or the EWZ ETF that tracks the Brazilian market, but this market has been all over the place, very, very unstable. At least that's my opinion. But this is not very stable. And now up. But again, even if the price breakout, we don't have the minimum requirements for the ultimate Muade breakout. Does that mean this market is about to roll over and play dead? No, because one of the things that would have to take place is we would have to break these major lows on the monthly RSI first and foremost before a major pullback, just like we had to break this trend line here before we saw a major reversal or break a trend line here. So until we see a break of this trend line here, this market is okay. It's not the best, it's not the worst, but it's stable, and that's all you can ask for. The VT, the Vanguard Total World Market, so tracks the entire global trading market, and we can see here again no minimum requirements for the ultimate Muade breakout, even as prices are still moving higher for the third month in a row. But we've seen that with other markets, so no surprise there. It's just something that market's been doing across the globe, Let's take a look at the EFA. Again, this tracks the Asian market, and not the worst. It's positive for the month. Is it breaking out? Not really. I mean, based on this closing high here, but even if it was to break out there, we don't have the minimum requirements. Again, could also be challenging this break point here where it stalled recently. Resistance here, resistance there. So of course, bulls want to be able to move this higher to increase chances for the Asian markets to show an uptick. And as long as we are positive for the month, let's just let these markets be. No need to fight the trend. Oh, that's European markets, my bad, not Asian markets. Asian markets, take a look at. So European markets looking okay. Asian markets, same thing, honestly. There's a break point here recently in late 2008. We need to be above this red line. If the market is to move higher, this red line happens to be around RSI 61.8. So pretty much I'm repeating myself at this stage. Yes, markets are okay as long as they are positive for the month. Are they outright bullish? Not so, but I don't think it would be a good idea to be trying to go against the trend, because the trend has not broken to the downside. Now the metals can be in play as long as they are positive for the month also, and individual stocks are breaking out. Or we can see again on the weekly, something I've talked about. As long as we continue seeing this weekly line of support, then we can anticipate that this is a stabilizing effect. Usually when you hold the RSI 50, you tend to come back and test recent highs. So I would say that continues to be the case until we break this RSI 50 area. Gold and the metals are generally okay. Keep in mind, this is a good visual example of what we are looking at right now. As long as that held, we had an opportunity of upticking, and over time the market would come back to test previous highs and actually improved on them. Now of course, if we end up breaking below this trend line, that's not gonna be good for those who are bullish as far as the metals are concerned. Same thing with the GDX, the miners. As long as this is holding, that remains exactly what the bulls wanted to see. And take a look at silver. Again, this is just a repeat. Keep in mind they've been trading in a range over the last couple of weeks. Silver also needs to hold back above RSI 50 if the metals are going to challenge recent weekly closing highs. As I noted last week, we can watch this simple line as far as the silver chart is concerned, the SLV. As long as this is holding, then that remains constructive, and that might suggest that over time gold stocks might and silver stocks might start pointing higher. Of course, a break of that line would be a sell signal, at least in the short term. Quick look at the dollar, and we continue looking at this from the RSI 69 perspective, where we've had recent RSI 69.1 rejections, and we see all of this have led to multi-month pullbacks in the dollar. So as long as that's the case, we can lean towards commodities having a little bit of a bias to the upside, as long as it's not the worst sell signal on the dollar, but at least we are not seeing a breakout. Now, if it can over time come back and trade above 69.1, that would be very bullish. But right now I would say it's generally in this range here. Is it down? Is it up? No, it's just forming a base. But so maybe either it is setting the stage for eventually breaking out, which would be bearish for the metals, or could break below the range and continue lower and push metals higher. Take a look at USO, which is trying to get out of a range that I've been highlighting for many months. It is this range here, this wedge, and it's not really definitively out of that area, but as long as it is trying to move above that, maybe this is changing. But keep in mind, honestly, we are still stuck in this. If I take the weekly closing price levels, we are still in this box since May. So if you're counting, that's 8 months in this range here, and we haven't moved above that range. On a highs, weekly closing highs, that's the high there, weekly closing lows somewhere there, we are still in this range. Ultimately, what is needed here is a constructive and decisive breakout for the bulls, or a breakdown below the range for the bears. If you take a look at the daily, what we've been pointing out is as long as we are trading above 12.22, actually 12.20, that's a short-term reason to be bullish, and I would say that's the case. So one can continue holding here as long as we are trading above 12.20 for USO, similar to WTIC, breaking out on the daily above 58.58. As long as they are above these prices, you can hold them. If they reverse back below these prices, that's a reason to close those short-term swing trade positions. Let's take a look at Bitcoin. I'm not sure I have strong comments, but generally speaking, we are trading below the moving averages. So net, we can say sideways with a slight bias to the downside, just because we are trading below the moving averages, the 50 and the 200-day moving average, the 50, the 200-day, and we're trading below that. So generally, that's not a strong setup, but still within this range. So really, as long as we're within this range, tough to decide which way this market is wanting to go. In the short term also, we can see that on the weekly, this level here continues to hold. This is where we started seeing a recovery as far as Bitcoin is concerned, after drifting lower for a couple months. Actually, we started upticking here, and it is from this area right here where we are seeing support. So as long as we are holding above the red line on the RSI, then this is a stabilizing effect. But at the same time, if we end up breaking below this close, the recent weekly closing low, in other words, if it breaks below this range, that would be bearish, which would mean breaking below this black line. Keep in mind, on the monthly, the risk is a break below RSI 50 on the monthly, which would open the possibility of a big down month, just like we did here. Keep in mind, we have a reaction also should we get a bias where the market, in other words, the flip side is a market moving above 50, you tend to have a good movement to the upside. So what I'm saying here, since we are trading above 50, the risk is for a break below 50 for a big down month. I've been saying maybe it would need a breakout above 2019's monthly closing high for Bitcoin to really get any upside momentum. Right now, I would say sideways at best, bearish at worst. Let me stop right there. This is Eric Mwathe with Mwathe.com. As always, good luck, peace, and blessings. Do enjoy your weekend. I am out.